Ladies and gentlemen, welcome to the Elite Economizer, where financial wisdom and economic empowerment converge. In today's video, we embark on a journey that promises to be both informative and potentially life-changing. We've got a script that has been rebranded and carefully curated to prioritize your financial well-being. This isn't just another YouTube video, it's a guide to mastering financial literacy and economic excellence. Now imagine peering into the future of the economy through the words of none other than the legendary financial guru, Robert Kiyosaki. We're about to unravel the insights he shared in his latest talk. These insights can help us not only navigate the uncertain waters of 2023, but also offer a glimpse into what 2024 may have in store for us. This is your opportunity to gain invaluable knowledge that could make a substantial difference in your financial journey. But before we dive deep into Kiyosaki's insights, I want you to do something important. If you're here with us, if you're curious about what the future holds, if you're genuinely interested in mastering financial literacy, then I encourage you to stay till the end of this video. Hit that subscribe button and be a part of our community. Your subscription will keep you updated with our latest content, ensuring you're always ahead in the game. Now, let's talk about what Robert Kiyosaki has to say. He opens our eyes to a looming economic bubble, but this isn't just any bubble. This is the everything bubble. According to Kiyosaki, this bubble is on the brink of becoming the everything crash. And here's the kicker. He expects it to be the most significant crash in world history. Now, you might be wondering, what makes Kiyosaki's predictions so significant? Well, it's not just his reputation, it's his track record. He successfully navigated the 2008 housing bubble collapse by capitalizing on plummeting real estate prices. He borrowed millions and seized lucrative opportunities. So, when Kiyosaki speaks, it's not just words, it's backed by experience. But it's not all doom and gloom. Kiyosaki, always the optimist, believes that this impending downturn isn't a cause for panic but rather a golden opportunity for the financially savvy to make life-changing amounts of money. He foresees a significant transfer of wealth. So, what should you do to navigate this potential financial storm? Kiyosaki offers some invaluable advice. He's optimistic about buying opportunities that will arise in the coming months. He believes it's time for the poor to get rich. While stocks, bonds, mutual funds, ETFs, and real estate might take a hit, thousands from the lower and middle classes can emerge from this turmoil with newfound wealth. Kiyosaki's confidence isn't just based on a gut feeling. He has a strategy. He's been bullish on gold, silver, and Bitcoin. While he anticipates these assets will experience a dip, he advises investors to seize the opportunity to purchase them at reduced prices. He firmly believes they will rebound once the Federal Reserve concludes its campaign of interest rate hikes. Now, here's where it gets intriguing. Kiyosaki's advice extends beyond traditional investments. He suggests stockpiling essentials like trash bags, toilet paper, and canned goods. You might find this odd, but it reflects his concern about beating inflation and securing financial stability in uncertain times. It's a different approach, but one that's worth considering. The question that lingers is when we'll have to face the repercussions of the excessive debt built up in the system. We've tried to avoid these repercussions for decades by printing money and kicking the can down the road. Kiyosaki believes we're in the final 5 minutes. The infield is filling up with water and there's only 5 minutes to go. When it comes to choosing between two paths, Kiyosaki leans towards inflation as the preferable way, even though it leads to the same destination as deflationary austerity. It's all about managing the impending impact. Now, here's where age and experience come into play. Kiyosaki reminds us that we're coming out of the longest bull run in history, which began in 2011. He emphasizes the importance of understanding the age and experience of the people you're taking advice from. Those who have experienced market crashes and economic downturns might offer a different perspective. He's watched the young guns who entered the longest bull market in history, and he's cautious about their confidence. He's not one to believe that the Federal Reserve can save us. He questions whether the Fed can print oil, gas, or food. And while some say, "Don't fight the Fed," Kiyosaki encourages us to think differently. But this isn't just about being critical of the Fed. It's about exploring alternative investments. Kiyosaki owns Bitcoin and Ethereum, and he's optimistic about the cryptocurrency's resilience. He believes Bitcoin's price will surge to $120,000 in the coming year, driven by the upcoming halving event. Kiyosaki's approach to safeguarding investments revolves around staying one step ahead of inflation and economic uncertainty. He encourages individuals to consider alternative assets like Bitcoin as a means to protect their wealth. His views may be controversial to some, but they reflect his commitment to financial education and empowering people to make informed decisions about their financial future. Now, let's delve deeper into Kiyosaki's perspective on the economy and how it affects various aspects of our lives. This is where his unique outlook and insights can reshape the way you approach financial decisions. Kiyosaki's concerns extend beyond traditional investments. He emphasizes the significance of tangible assets like gold, silver, and Bitcoin. While these assets may experience temporary downturns, he firmly believes that they serve as hedges against the depreciation of traditional currencies. In a world filled with constant injections of trillions of dollars into the economy, Kiyosaki is not alone in his concern about inflation eroding the value of fiat currency. This raises an important question. Is it time to reconsider our approach to protecting our wealth? Kiyosaki's stance on stockpiling essentials may sound unconventional, but it's a pragmatic response to the concern about beating inflation and ensuring financial stability in uncertain times. By accumulating items like trash bags, toilet paper, and canned goods, he intends to safeguard his financial well-being. This unusual approach is worth exploring, especially in an economic landscape where unconventional strategies are gaining prominence. As Kiyosaki's insights into the economic landscape continue to unfold, we're reminded of a crucial factor: the timing of our actions. When will we face the repercussions of the excessive debt that has been accumulating for decades? It's a question that requires our attention, especially when we consider that by the time we can see the problem, it might be too late to avoid it. Kiyosaki's preference for inflating out of the impending crisis is a strategic choice. In his view, it's a more favorable path compared to deflationary austerity. However, both paths lead to a similar destination, but the advantage of choosing inflation is the potential for more manageable outcomes in the face of economic challenges. Now, let's shift our focus to a fundamental aspect that Kiyosaki highlights: the importance of age and experience in financial decision-making. He emphasizes that we are emerging from the longest bull run in history, which began in 2011. This period has seen significant market growth, and Kiyosaki, with his unique perspective, made some of the biggest fortunes of his life during this time. Kiyosaki's experience during the 2008 housing bubble collapse is a testament to his ability to seize lucrative opportunities even during economic downturns. He borrowed a substantial amount to invest in real estate when prices were plummeting. This bold move paid off, and it underscores the significance of timing and experience in financial decision-making. It's essential to consider the age and experience of the individuals offering financial advice. Kiyosaki's wisdom and insight are shaped by his years of experience, and it's a perspective that can provide valuable guidance, especially when we're facing uncertain economic times. As Kiyosaki looks at the young generation of investors who have experienced only a prolonged bull market, he offers a word of caution. He has witnessed their confidence in their investment strategies, but he reminds us that the current situation is different from what they've experienced so far. Kiyosaki challenges the notion that the Federal Reserve can save us from economic challenges. He questions whether the Fed can print essential commodities, like oil, gas, or food. It's a perspective that encourages us to think critically and consider alternative approaches to financial decision-making. In a world where financial education is a vital tool for individuals to navigate the economic landscape, Kiyosaki's insights serve as a beacon of knowledge. His unconventional and bold approach to investments, along with his commitment to financial education, empower individuals to make informed decisions about their financial future. In conclusion, this isn't just a script. It's a guide to help you navigate the economic landscape. It's an opportunity to learn from the insights of Robert Kiyosaki and make informed choices about your financial future. Remember, age and experience matter when it comes to financial advice. And don't forget to subscribe and hit that like button to stay connected with The Elite Economizer for more enriching content.